The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN headquarters in St. Petersburg, Florida. Tom's out today. He'll be back on Tuesday, coming into the long weekend. And yet again, we got markets making record prices to start off trading. Right now, Dow Jones up 50 points, trading at 29,347. Get the S&Ps up about 8 points at 33.24. That's only a few points off the high for the S&P. NASDAQ up about 20 points at 93.76. Russell 2000 in the positive as well. And we're going to start it off with a chart of the VIX. And man, you got to check out that S&P chart, right? A beautiful thing for the week. And even backing things up, putting it on a 5-day chart. I mean, just look where we were to kick off Monday. It's just remarkable how high these things continue to go. 3260. We've just added approximately 65. That's 2% this week alone to the S&P. Let alone you want to back things up a little bit more. You really want a chart? There's the last 365 days, and that doesn't even encompass the original burst we got in the S&Ps towards the end of December off the Christmas Eve low. We're now trading at 33.24. Early in January, 25.96. And to put it in context of where we were on that low, there is your chart. There is your low on Christmas Eve of 2017. We reach a low in the S&Ps of 23.16. We are now up more than 1,000. I had to pause. 1,000 S&P points from Christmas Eve of 2017. Not many blips in that market as the train to higher prices just continues on. Jumping over to the charts, we'll go through some of the indices. We'll start it off with the Dow. Currently trading 29,304. You see the melt up in the markets overnight. There's your close of action yesterday, 4 p.m. And markets overnight trade up to positive territory, hang at that level, making highs at about 8:45 a.m. this morning. S&P 500, pretty similar action. We close out yesterday's action, that's 6 p.m. We close it out right at around this level of 33.17. We have the S&Ps up between 6 and 8 points right now, just off the highs we made at 8:45 a.m. this morning. NASDAQ 100, a little bit of a sell-off on the opening bell, but nothing too dramatic. We're up there at a high of 91.83 in the NASDAQ 100, currently trading 91.56. There's articles over there. We'll cover Google getting a $1 trillion market cap for the first time. Crude oil almost reaching $59. We've had some real volatility in the price of crude. Yesterday, finally catching a bid for the first time in a while, as crude early yesterday was at $57.56. We trade all the way up to $58.85. That's $1.30 from about 7:30 a.m. till 11:30 a.m. in the morning. And we've just kind of been hanging right at this price level, excuse me, since the middle of the trading day yesterday, almost reaching $59 at about 9 a.m. We were within about a few pennies of that price level. Gold back above $15.60 briefly. The yellow metal currently trading at $15.56. And euro with some weakness as we see a little bit of dollar strength. We have the euro trading at 110.98 right now. In terms of what else you have happening in the market, we have housing starts to pull it up. And let me get that article. Here we go. As the housing market just continues to show strength. This news coming out at 8:30 a.m. this morning. U.S. housing starts soar 16.9% in December to a 13-year high. U.S. home building surged to a 13-year high in December as activity increased across the board. Housing starts jumped 16.9% to an annual rate of 1.608 million units last month, the highest level since 2006. So to surmise, 16.9%, seasonally adjusted rate, 1.608 million units, highest level since December 26, 2006. This percentage gain was the largest since October of 2016. That's about 2.5 years now, almost 2 years, 3 months. The data for November was revised higher to show home building rising to a pace of 1.375 million instead of 1.365. Economists have been looking for about 1.375. Housing starts soared 40.8% on a year-on-year basis in December. An estimated 1.29 million housing units were started in 2019, up 3.2% compared to 2018. Building permits building permits fell 3.9% to a rate of 1.416 million units in December. Just a remarkable number. Housing, of course, low interest rates. The housing market continues. Other news out there, China saying its economy grew at 6.1% last year, in line with expectations, but that would be a pretty slow rate for China. Let's see when we get into. So analysts polled by Reuters looking for 6.1% versus 6.6 in 2018. Still, China's, there we go, GDP growth last year, slowest since 1990. So maybe those tariffs putting a hurting on the China economy. They got a lot they're dealing with over there, let alone the Hong Kong protests going on. Although Beijing's official GDP figures are tracked as an indicator of the health of the world's second-largest economy, many outside experts have long expressed skepticism about the veracity of China's reports. They might be playing a little fudging of what they push out there, but just checking out, even since the Q1 of 2018, quite a trend. 6.8 down to about the 6.5, 6.4 range in late 18, early 2019. And from there, we're now just hanging out at about 6%. Come on, where are we going? China's 6% on year. What's going on? There we go. China's GDP grew 6% on year in the fourth quarter of 2019. Analysts had been looking for about 6%. In the third quarter of 2019, GDP growth in the world's second largest economy was 6%, the slowest pace since the first quarter of 1992. What else we have happening? I mentioned it. Alphabet, Google's parent company, hits $1 trillion market cap for the first time. Google just keeps chugging along. Many of those NASDAQ stocks, it's pretty remarkable now. Apple, I believe Apple is sitting at about $1.35 trillion, just leaping in front of the others. But Google up at that limit. $1 trillion market cap, making it the fourth company to hit the milestone after Apple, Amazon, and Microsoft. Amazon fallen from the wayside of that number, though. We'll jump over to that chart in a moment. Despite the company's seemingly perpetual cultural clash, Wall Street sees more dollar signs. So $1 trillion market cap, fourth company to do it. Apple was the first one to hit the milestone in 2018, then Microsoft and Amazon. Apple and Microsoft are still at that level, while Amazon's fallen off the mark. Analysts are bullish on the company's newly appointed CEO, Sundar Pichai. In a surprise announcement in December, as you may remember, we had Larry Page and Sergey Brin stepping down, kind of a new age over at Google. And to see how those shares are reacting this morning, the market just extending those gains. Now 1468, up 1.1%. Jumping over to some of the other stocks, Apple, AAPL, up about 0.5%. That is a bad tick down there. Not quite at the highs for Apple. You have Microsoft continuing the gains. A little bit of a sell-off from Microsoft, pairing the overnight gains that it had. Still up about 0.1%, though. And Amazon, to put things in context, 1874. And to see where Amazon, how far we have to go back, I think it's even a little bit further. Yeah, there we go. So 2050, that was their trillion-point mark. Not sure they got back up to it, actually, in last June, July. But Amazon, as Apple's really flown above that limit, Amazon faltering a bit, just kind of hanging out, going all the way back, almost 2 years for Amazon, year and a half, that price level. Stay tuned, folks. We'll be coming back. We got some more news to cover. Bank earnings this week. More earnings coming up next week. We'll be right back in 3 minutes.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got markets near record territory. Dow up 35 points right now. S&P's positive by 5. NASDAQ positive by 14. In terms of some of the stocks making moves this morning, Schlumberger, oh, let me put this, that's a weekly chart. Quite a chart for Schlumberger, but out with their earnings to drill it down, coming out with 39 cents. Basically, the market was looking for, 38. They start their conference call at 8:15. Got to love the thicker swim charts. You see exactly when they come out with the earnings, 6:45 a.m. this morning. Conference call begins at 8:30. Schlumberger up about 1.7% on their earnings. In terms of other stocks making moves, Gap, how about this? So abandoning its plan to sell off Old Navy. The market liking this. So Gap called off the plans to split Old Navy into a separate public company. It's also announced Neil Fisk, President and CEO of Gap brand, is departing. Gap said the 2019 holiday season wasn't as promotional as it expected, helping profit margins. So Gap called off that spin. They talked about that they announced that the president and CEO is departing. Shares up more than 9%. We'll jump over to that. GPS is their symbol in a moment. The plan to separate was rooted in our commitment to value creation from our portfolio of iconic brands, the interim president and CEO said in a statement. While the objectives of the separation remain relevant, our board of directors has concluded that the cost and complexity of splitting into two companies, combined with softer business performance, limited our ability to create appropriate value from the separation. The work we've done to prepare for the spin shone a bright light on operational inefficiencies and areas for improvement. Gap's plans to spin off its once star Old Navy brand, which were first announced last February, were called into question with the ouster of the former Gap CEO, Art Peck, in late 2019. Seems like that's a revolving door for that company as they continue, one of the retailers continuing the struggle. So let's see. The San Francisco-based retailer announced in November that Peck was stepping down. Since 2015, he had been there. Peck was replaced by Fisher, the son of Gap's founder. Gap said Thursday intends to appoint a new CEO to oversee his full portfolio of brands, which includes Banana Republic, Athleta, and Hill City. Not familiar with these two. Banana Republic, of course, very familiar in the malls. And to jump over, see how those shares are trading this morning, GPS. So talk about pairing some of the gains. Closed yesterday at about $18.50. The market reacts to that news when we get it last night, spikes to 2140, and talk about some waned optimism as just like that, we have gap shares now negative on the session, down 1.6%. Even after that, and to give it some context, there is some context for you. You put it on a 3-year, 2018, we're up at 35.68. We reach a low of 15.11 back in September, and we've just been hanging at this price level basically for the last 6-7 months in gap. Checking out on some of the other retailers while we're here. Target, quite a different story. Now, Target just coming out with their revision of their holiday sales earlier this week, pairing some of those losses as it was down to 113, said the holiday season not what they were looking for, back up to about 117 today. Walmart reacting to the Target news when they came out, early Wednesday. Walmart, though, right back up to where it was earlier prior to that news. We covered Amazon, but Amazon, a different animal altogether. 1873, Amazon's all-time high. We looked at it about 2,050 on that number. Jumping over to other news stories for the day. NBC streaming service. Peacock will have free version and 2 subscription tiers starting at $4.99. Pretty interesting to see how the continual landscape of streaming and so forth is an ever-changing environment. There's a lot of business models that these companies can go for. NBC trying kind of a different one here with 3 different versions. You want free. I'm sure that's going to be ad-supported. Then you can have a $4.99 one. I believe there's going to be one right at around $10. So the inclusion of sports in a paid version, Peacock Premium, is another differentiator from rivals such as Disney+, HBO Max, and Netflix, which don't include live games. I imagine, though, you got to know that Reed Hastings over at Netflix, Jeff Bezos over at Amazon, well aware of the draw that live programming has. And I imagine it's only a matter of time before they are able to compete and offer that service. The NFL is probably the one that has kept those games away from them because the NFL has such a reach right now on regular TV. Not sure that they want to sell the rights to a company like Amazon for Prime or even Netflix. They just might not have the reach or the deliverability that they're looking for, but that is going to change. So NBC unveiling its Peacock streaming service to investors last night, highlighted by a free-for-all version that stands out in an increasingly crowded online video market. Of course, Disney just launching their service in the last couple months. Peacock Free will consist of 7,500 hours of programming. Now, this launches in the U.S. July 15th, including next-day access to current seasons of first-year NBC shows. Not bad when you're talking about next-day access. We live in a time where you really don't need to watch shows the moment they premiere. I'm more about binging. Complete seasons of classic series, Universal movies, and curated content such as SNL Vault and Friday Night Movie. Peacock Free should give NBC Universal an immediate surge of advertising revenue as consumers supplement their diet of streaming video with a product that won't cost extra per month. Not bad. Free service. You're going to get some ads in there. So let's say they expect Peacock can make about $5 per month for every Peacock subscriber in advertising revenue. Makes sense? And as has been reported, there'll be a $4.99 version, and they'll also, so that's going to have advertisements, even the $5 one, and a $9.99 with no ads. Both paid tiers will include live sports and early access to late-night shows. Peacock Premium will include non-televised soccer games beginning in August, Premier League, and Ryder Cup matches in September. The inclusion of sports is another differentiator, as we discussed. Peacock Premium is going to give NBC fans an early look at its late-night lineup, the first of any broadcast network. So, usually you're waiting for the Tonight Show at whatever time it is at 8 p.m. You're going to be able to watch those as opposed to 11:35, and Late Night with Seth Meyers, 9 p.m. as opposed to 12:35. Not sure there's enough demand to really be a differentiator on that front. And then the premium for Comcast and Cox subscribers. So Comcast and Cox will get free access to the premium with ads and can pay $5 a month for the ad-free version. And to jump over to see how Comcast CMCSA, the parent company, looks like they like that news initially, spiking to a high on the open of $47.88. We've paired about 50 cents of that, more than that, 60 cents from that high, still up about 0.8%. Seeing if that's hitting some of the other streamers out there. Netflix, higher today, 341.46 by about 0.8%. We covered Amazon, not really a streamer, but they're in the mix. Disney, flat for the day. And to put some context of Disney, backing it up on a daily, There is when they begin to talk about, no, that's November. Let me back this up even a little bit more. As you can tell when Disney, so I believe this is the day that they start to talk about the streaming service in terms of that they're going to come out. It's going to be $6, $7. Maybe it was in November. No, that is actually when they went live. Yes, so this is when they started to talk about the plans. They get it together from April till October. And then from October, this is when they actually go live. This November 13th is the day that I believe they announced that they had 10 million subscribers already. We make a high of 153, paired some of those gains. But even since October 31st, even since the day before they launched, which I believe is November 7th, still up almost 10% on Disney from that time. Stay tuned, folks. We'll be right back in 3 minutes. 30 minutes left in the program. Come on back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Markets trading higher yet again, right up there near record territory right now. You got the S&P's up almost 10 points, 33.26. That's about 2 points away from the all-time high. Dow Jones up 75 at 29,372. NASDAQ up 24 points at 93.80. I'm going to jump around, so we're still getting in bank earnings. And to put things in a little bit of a context, jumping over, this was the morning market report that I did on Monday. Quite a week of bank earnings we've had, most of them beating. Wells Fargo on Tuesday, one of the highlights of the banks one of the only that really comes to mind that really disappointed the market, and I'm sure there's more than just them. This morning, though, we got Regions, we have State Street, jumping over to those two, RS, Regions Financial, continuing, pairing some of the, I guess, gains, you could say, not really a gain, right? Falls apart down about, I say fall apart, down 0.7%, but State Street, how about that? Up more than 5% on State Street. Their numbers coming out at 7 a.m. this morning. They were looking for 171. They came in at 173. Conference call began at 10 o'clock. Regions Financial up about 5%. Checking in on some of the other stocks that reported earlier in the week. JP Morgan kicked things off with quite a bang early in the week, but you can see, you put things in a little context. I like that phrase. But we're almost back to where we were before they came out with those numbers. And man, oh man, talk about hitting it out of the park. They beat just across the board, billions in revenue, record quarter, and the market pairing the gains on Tuesday, pairing the rest of the gains on Wednesday, and back to where we started the trading week. Wells Fargo, on the flip side of that, tough week for them as they fell out of bed when they came out with their earnings on Tuesday, and we're sitting at $48.85. We were trading about $52 ahead of that. Morgan Stanley, with their numbers, quite a different story. Their numbers early yesterday, trades higher to $57.36. Back up today, another 0.6% from Morgan Stanley. And let's see, Ozark we had as well. Talk about some volatility for them, down about 4% today. They reported, looks like after the bell yesterday. Schwab. All right, SCHW. Reporting yesterday, trading higher, continuing today. How about BlackRock? Reporting early Wednesday and extending those gains. Not bad. Jumping around to what else we have going on. Boeing continuing to make news, and not in a good way. Wall Street expect Boeing to take another big, ugly charge, quote unquote, quite the analysis there, on 737 MAX. Bank of America estimates total cost of crisis as high as $20 billion. This number just keeps going up. I mean, there is a duopoly in the airline industry. You got Boeing, you got Airbus. Boeing, the only American company. I don't think it would be smart from a strategic standpoint for America not to have a company that produces planes. I expect they will rebound at some point, but I don't think we've found that Max Payne area just yet. They have a new CEO and facing investors for the first earnings call on January 29th. That's 12 days from right now. So it looks like, getting into it, cooperate. So the news isn't going to be so rosy for the fourth quarter earnings. Those best-selling planes grounded in the March in the second of two fatal crashes. The crisis cost former CEO Dennis Muhlenberg his job, so Boeing has suspended it. So now, let's see, get into this. Drove down orders to the lowest levels in decades, hurt its supply chain, racked up costs are now around $10 billion. So they'll have an earnings call on January 29th. But, you know, when you see headlines like this come up, and to see how Boeing is trading this morning, there was a trade lower, but to provide some light to this story was out before 9:30. So the market hadn't reacted that much. We're still just floating around the area we've been trading at. The point being, a lot of this news pretty priced in, right? You back things up 10 days, we just kind of been hanging. And there have been some tough stories on Boeing, including, unfortunately, the plane being shot out of the sky in what seems to be from Iran. That seemed to be a worry moment, as in maybe there was a mechanical failure. It comes out that that had nothing to do with probably mechanics, but just floating around this 330 number. There were more emails made public over the last 10 days that did not shine a good light on Boeing. Nonetheless, it looks like maybe 330 is an area that the market says is kind of the low range of that. You back things up to a year ago. This goes back to March. I believe that was the beginning of this saga. We were at 446. Boeing trades down hard. We reach a low of 319 in August. We make it all the way up to 390 and just back. But you can see, even in the last year, 320, 330 seems to be the pain area that the market says, you know what, no matter what's going to happen, Boeing's going to sell planes. Maybe they'll remarket that product, rebrand it, whatever it is. They have a new CEO. And since about the last month now, we've just been hanging at this level. Kind of seems like the market just waiting to find a low. In terms of what else happening, let's see what we have. There we go. Manufacturers to spend $26 billion on upskilling in 2020 to attract and keep workers. So with the skills gap plaguing manufacturing in a historically tight labor market, companies are spending big to quote-unquote upskill their current workforce. Manufacturers are set to spend $26.2 billion on internal and external training initiatives for new and existing employees in 2020 to combat the shortage of available workers, according to the Manufacturing Institute. Nearly 70% of manufacturers said they are creating or expanding training programs in their workforce. 3/4 of respondents said upskilling workers help to improve productivity, promoting opportunities and morale. Quote, in manufacturing, you're constantly learning and growing, and the technological change is enormous. That's the Institute's executive director. What you're going to be able to continue to do as you layer new skills on top of those fundamental skills will make a very interesting and dynamic career at a time when technology is really increasing. Seems like that would be an appropriate thing. We have unemployment at about 3.5%. Many of the jobs need skill, and hopefully those manufacturers can get that done. Another story I had loaded up here. Talk about privacy. Talk about Google becoming a $1 trillion company. I think that was yesterday or today. And privacy just continues to be a story. Google Maps keeps a detailed record of everywhere you go. So Google Maps, if you haven't done this on your own phone, I encourage you. We did a segment about Facebook just recently that I discovered Facebook was tracking my every movement on my phone. There is a way to disable that. If you're interested in paying attention, so Google Maps tracks everywhere you go on your iPhone or Android and then keeps a log of the information in a timeline that shows you everywhere you've been. Not only you, other people could get into that information. This includes a creepy level of detail, quote unquote, like exactly when you left work, when you arrived home. This type of data, it's scary what people can do with it if they get their hands on it. It'll show you if you were driving, walking, on a train, any pit stops you might have made. So an example, I mean, this is where it can just map out everything you have, exactly where you are, to a very, very scary, detailed place. So open Google Maps on your iPhone or Android. You're going to hit your picture, your data and maps, see and delete activity, hit the menu button on the top right of the page and select settings, delete all location history. And I encourage you, if you're using social media, if you have Facebook on your phone, what it is, because one of the new iPhone iOS operating systems, the last time they updated it, really started showing you who was tracking what. I'm not sure they do this the same on Android, but they're all tracking it. So pay attention, because that's a lot of data that you have out there that you may not be aware of. Checking out on some of the markets, gold contract, $15.55 right now. You've got oil trading at $58.33, and the S&Ps right up there near all-time highs that we made early in the session pre-market, currently trading $33.25. Stay tuned, folks. We're going to take a look at the earnings that we have on tap for next week when we come back. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Market's just hanging around near record territory. S&P is right now up about 5 points at 3323. Dow Jones up 55. NASDAQ up by 12. We got a caller. Let's go to Lou in Spokane, Washington. Lou, good morning.
Hey, hi, Tommy.
How we doing, man?
Oh, great.
Good.
I was calling. I wondered, had you seen that Ray Dalio has a $1.25 billion of S&P puts that are expire in March?
I believe I saw that story when it first came out, Lou, right? Like a few weeks ago or something like that, it was reported, and he kind of pushed back on it maybe and said that, maybe it's a hedge or maybe, it's not a net position. But I did see that story when it came out. And, of course, he's going to push back on that if he doesn't want his position revealed or what it is. But if that's what you're talking about, yeah.
Yeah. Well, whether it's a hedge or not, it's some kind of bet against the market,
it is.
And
no,
it's coming due in March.
It's at least an insurance position, to say the least, right? And that seemed to be the reporting. If not a net position, which you could understand why he would not want the market to know if he was that bearish.
Yeah, right. And, hearing you describe what's happening, we got kind of a mini melt-up going, right?
I guess you could call it mini, right? It might be a big one, but no, I hear you. I do. It is. No, every day, Lou, right?
It could be a big one.
I think we're in like 7-8 straight days that the market just persists higher.
Right. You're seeing a lot of pullbacks, too, though, right?
Yeah. No, we've had some action for sure. But the indices overall, man, across the board, whether it's we had quite a day even in the Russell yesterday. Dow new highs, S&P, NASDAQ, we're now on a 30,000 Dow watch is the rhetoric out there. And we're not far off, man, only 650 points, which is barely 2% of the Dow from that number.
Right. You've read the Livermore book, haven't you, Tommy?
I have, yes.
Jesse Livermore?
Yep.
Oh, man, he would love being alive today. See, all the stuff in that book, I believe, is being implemented right today, including the damn bucket shops. But they're using different technology.
Yeah.
So the common technique when you got a large position and you want to get rid of it is you engineer a blow off. And then on the way up, you can unload vast amounts of stock or commodities.
And that's reminiscence of a stock operator, folks. It's the book that Lou was talking about out there.
Yeah, I marvel at. See, human nature doesn't change.
Nope.
Technology changes.
They say it for sure. Don't think there won't be a pullback, folks. It is going to come at one point. And I know you were talking about options. You mentioned S&Ps, Lou. I mean, the VIX right now, right? That's the other side of that. Is that if you're a little bit skittish, the market, just to put what could be, Dalio, you're sitting at a VIX at 12 right now. In context, not a lot of money to potentially hedge a position if you wanted to. You pull it back a year. these VIXs, they spike, and even if you don't see the world ending, right? I mean, we are at a level that usually you get down here, you're not going much lower on this VIX in terms of how you can price things. If you do want to put insurance on a portfolio, that's one way to do it without closing out your positions. And looking even at the S&P, because if you pull up some of the options, it's low volatility that's priced into this kind of across the board, man. It really is.
Yeah, it's a pretty complex game here, and the worst thing is if we get a 10 or 20% move up in a month or two, that will signal some kind of a big blow off, and I think big trouble follows that. But even right here, I don't know. I'd keep my eyes open.
No, it's always important to keep your eyes open, man, especially when, as I just mentioned it, at the beginning of the show, Lou, I'm not sure you heard it. I mean, I had to pause because from the low of December, which was 2316, now this is last December, I'm going back, we're up more than 1,000 S&P points from 2316, now at 3328. You could just see a natural pullback as opposed to the melt up. I mean, putting this on a weekly chart, I mean, my goodness, even going back, there hasn't been, but going back to October 7th, so we're talking about 3 months. I get the chart up here. We had one brief negative week, November 18th, barely negative. We also had a negative week, December 30th, but both of those bars marginally negative. Every other week, we've just melted up. And that was going into the final quarter of the year when people were already talking that we had gone from 2316, the December low, up to almost 3,000, and since then we're now up another 11% about because we're sitting at 3,300. So, you want to be aware. You want to be aware, especially because we have an election coming up. We have some geopolitical issues going on. Hopefully none of those cause too much of a havoc on the market, but there's always going to be some risks in an election year with two candidates with very stark differences in terms of what they're going to be doing, so I imagine that may play into things.
Yeah, that's right. There's a lot of pieces to this puzzle.
All right, Lou. Well, I appreciate the call, man.
Well, thanks, Tommy.
You have a great weekend, man.
You too, man.
Thanks, man. Yeah, I mean, that report, when it came out with Dalio, he pushed back on it pretty hard in terms of having a multi-billion-dollar short in the S&P, traded with options through March. But he's a trader, folks, and when you see a VIX at 12, when you have billions and billions of dollars in exposure, when you're up 30% last year, and again, just putting it in context, you don't have to be a genius to see that the VIX approaching the very lower lands, and we've gotten spikes usually now. We hung out at 12 between April, we did get a brief spike last year, now this is 2018, to 20, back down at that level. You see the spike towards the end when we had the market fall apart. We reached 35 on that Christmas Eve cascade to lower prices in the markets. And then last year, very low VIX, but every time we got down to that 12, now these are weekly charts, you see 4 or 5 weeks we get a spike, right? We're down here 4 or 5 weeks, but this one's been persisting. Since that October 7th, as I mentioned, we've had higher prices almost every single week except a few. So it might not be a bad time if you want to secure some of those profits, put on a little insurance, and maybe that's what Dalio is doing out there. Checking in on the earnings that we have going on next week. As I mentioned, so we'll start it off with Monday. 27 companies reporting on Monday, seeing what kind of jumps out at us. We got some banks still, many banks. The one thing that I picked up on, kind of combing through what we have on next week, we got through most of the big banks, but boy, oh boy, there are a lot of smaller banks that are reporting next week when you go down. I'm not familiar with many of them, but more bank earnings coming down the line on Monday. Tuesday, we get 41 companies, seeing who we have. I believe Netflix is next week at some point. Let's see where they jump out at us. We're going to get none of the names really. Capital One we get on Tuesday. What else do we have going on here? Nothing really jumps out. Let's see where we are on Wednesday. So we start getting some Air, Alaska Air. We get Abbott Labs, Baker Hughes. This is on Wednesday. Fifth Third Bank coming on Wednesday. In terms of other symbols, yeah, just lots of banks going through this list. Continual. All right, we'll check through these. And there is Netflix on Wednesday, as I thought, after the market close. We'll finish this up. We'll see what kind of earnings we have for Thursday and Friday. Don't forget, folks, the front page at TFNN, Larry Pesavento has a webinar coming up in a week and a half, 90 minutes. Check it out. Sign up for that Fibonacci 24/7. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Markets hanging near record territory. You get the Dow up about 40 points right now. S&P's positive by 5. NASDAQ positive by 6. Jumping back to the earnings. So as I mentioned, this is Wednesday's list. We get Netflix after the market close. You also have Raymond James, Steel Dynamics. You got Citrix out there, Johnson & Johnson before the market. Jumping over to Thursday, we get Alaska Air on Wednesday. We get more of those airlines on Thursday. So American, Southwest, and JetBlue coming out on Thursday earnings. In terms of other companies reporting, getting down to the bottom, you have E-Trade coming out with theirs. Intel, Comcast. Thursday should be a big day. Discover Financial. And then on Friday, I believe we had one I wanted to get to, 16 earnings on Friday. And what do we have? Anything? American Express. That was the one that jumped out on me on Friday. So banks done. Quite a number on this week on the banks. Next week, we go into whether it's Comcast, some of the airlines. Netflix on Wednesday will be one of the biggest ones the market will look for. What else we have happening? I mentioned it last segment. Check out the front page of TFNN. Larry Pesavento. January 29th, 12 days from right now, he'll be doing a webinar for subscribers to Fibonacci 24/7. New subscribers get a 30-day money-back guarantee. Larry sent over a great list of topics he's going to be covering. 90 minutes from 4 till 5:30. The simple math behind market moves. A hidden in plain sight trend change pattern that gives you early entry. How to find and update key harmonic numbers to trade against in the futures, Forex, and stocks. How to translate 3 go-to patterns into supply and demand and how to use them for entries. How to use Fibonacci numbers to indicate a continuation move. Lots in there. Can't even get to it all right now. Check it out on the front page of TFNN. Again, new customers, 30-day money-back guarantee. Larry's got a great report out every weekend, folks. So this is a great time to sign up. He put out a great update this morning. Appreciate you joining me. Stay tuned, folks. We'll be right back.
Larry Pesavento has just announced